For joining us. We saw this return of funds to emerging markets over the past couple of weeks. You think that besides the Fed hike and the Chinese GDP numbers, there is enough fuel for this fund flow to continue?
Hi, good morning. Thanks for having me. Yes, so I think most of the fund flows, as you mentioned, would have been due to what we're seeing about the Fed, the various mixed comments there, the chances of a Fed rate hike, and a lot of it would also have been reliant on people's worries over China. People were waiting for the GDP numbers that came out yesterday. Other than that, of course, I think there are probably other sort of minor idiosyncratic events that would have caused the funds, but I think those two would have been the main ones at the moment. We're not expecting any huge announcements from any of the other major central banks. We did see some slight easing from in Singapore from the monetary authority there, but nothing else has really caused the fund flows into the emerging markets so far, except uncertainty over what's happening with the Fed and what's happening with China right now.
Okay, Ian, hi, good morning. So what is the expectation for many of the emerging market equities like India? Will this, the flow of funds continue into markets like ours?
Okay, so I still think the emerging markets are going to be mixed. Some will do better than others. India, as I've mentioned when I've been on here before, is still one of our more positive stories due to the less reliant on the export story. Global growth overall is still seeing a drag on exports, so the trade story isn't going to be very supportive for emerging markets relying on that. Overall, though, I do think for the moment, especially with the comments from the Fed and the mixed messages we're getting, we are probably going to see a delay in the rate hike. So that should mean that should be more sort of flows into the emerging markets. A lot of people are worried about the eventual rate hike that's going to come into the US, while they're worried about the effects of a stronger US dollar, which will also be quite detrimental to the emerging markets. So far from what we've seen in the Fed, there has been a number of messages from various Fed officials. Some of them have mentioned that they see the Fed rate hike being pushed out. Some of them have even commented that maybe it's still before the end of this year. We do have a meeting in October. Our own team here at JP Morgan Asset Management, we think that the rate hike in October is definitely not happening. December is still looking a bit mixed. The market futures are suddenly pricing this at around a 30% chance, but it is starting to lean towards looking at a Fed rate hike being a 2016 story. So for the moment, it does look a bit more positive for the emerging market side there.
Okay. Well, Jan, therefore, what's the view on the Indian markets itself? We have seen about a 9% recovery from recent lows, going only by the Nifty. You think there's more juice left before the year ends?
I think there might be. We're still seeing the eventual, hopefully, effects of the government's efforts to increase ease of business in India. We have the Bihar election over this period, over the next few weeks, India's third largest state. So the way this election will pan out, I know from reading the polls that it does seem very close. It should either way give the government some signals of what to do. If they do come out of this state election poorly, it should hopefully give them a bit more, a bit of shove in the right direction to sort of push forward through on more government plans, government policy, reformation. If they do well, it shows that they've still got support, especially amongst the rural population. So it should show they're going in the right spot, and it should helpfully increase market confidence. So overall, I think India is still looking positive for the rest of this year.
How would you approach the Bihar elections, Ian? Because that's a big sentiment trigger for our own markets. In case the BJP loses...
I mean, you gave a very positive picture if they won, but what if they lost?
Yes, if they lost, of course, it would show a bit of uncertainty over what's going to happen. of course, maybe the support isn't quite as strong as they wanted. If they lose, though, I do think it might give the government a bit more impetus to try and push forward with more of their reforms, work together with more of their allies and some of the other parties. But, however, I do see it being a bit more uncertain on the market confidence side there if they do get heavily defeated.
So you would sell out?
I still wouldn't sell out. All right? There is still some positive in the fact that the government might still be pushed to roll out some more aggressive measures to try and get the market back on track.
All right. Thank you very much, Yan Hui, for joining us with your thoughts.